What's up, everybody? It's your boy Sat coming to you with today's stock pick, indicator help, and general investment tips. Remember, this channel is all about no face, just facts in 5. I do the research so you don't have to. Today, we're talking about one of the simplest but most powerful investing strategies out there: dollar cost averaging. And we're going to use Palantir, ticker symbol PLTR, as the example because this stock gets attention, it moves fast, and it has enough volatility to make this lesson really clear. Dollar cost averaging, or DCA, simply means investing the same amount of money on a consistent schedule no matter what the stock price is doing. Instead of trying to guess the perfect entry, you choose your amount, choose your schedule, and stay consistent. So maybe that's $25 every week, $50 every paycheck, or $100 every month. The amount doesn't matter as much as the discipline. Let's say you decide to invest $100 into Palantir every month. 1 month, PLTR might be trading at $180, so your $100 buys fewer shares. Another month, it might drop to $140, so your same $100 buys more shares. If it falls to $120, you buy even more. If it runs back to $160, you buy less. Over time, those buys blend together and create your average cost. That's why it's called dollar cost averaging. The beauty of this strategy is that it removes a lot of emotion from investing. Most people do the opposite. They get excited when a stock is running, buy near the top, panic when it falls, and then sell too early. DCA helps you avoid that emotional roller coaster because you're not trying to be perfect. You're trying to be consistent. And Palantir is a perfect example because this stock can move like crazy. 1 week, people are calling it the future of AI and government data. The next week, they're saying it's overvalued, the chart looks weak, or the moving averages are flashing warning signs. But if you're a long-term investor, the real question is not what Palantir does this week. The question is whether you believe the company could be worth more 5 or 10 years from now. Now, let me be clear. Dollar cost averaging does not mean blindly buying bad companies. If the business is broken, if revenue is falling, if debt is out of control, or if the long-term story changes, then consistently buying more can become a mistake. DCA works best when you're investing into quality companies, strong ETFs, or assets you truly believe in long-term. Here's the mindset shift. Red days are not always bad days. If you're building a position, red days can actually help you. When Palantir drops, your fixed investment buys more shares. That means volatility becomes your friend instead of your enemy. You stop asking, "Did I buy the exact bottom?" and start asking, "Am I building ownership in something I believe in?" Looking at PLTR right now, the stock has had pullbacks, moving average pressure, and moments where momentum looked weak. But that's exactly why this lesson matters. A trader may look at that and say, "I need to wait for the perfect signal." A long-term DCA investor says, "I'm going to keep building slowly, manage my risk, and let time do the heavy lifting." Think about it like filling up a gas tank. Sometimes gas is expensive, sometimes gas is cheaper. But if you need to keep driving, you don't wait forever trying to guess the lowest gas price of the year. You fill up consistently because the goal is to keep moving. Investing can work the same way. Dollar cost averaging is powerful because it helps regular people build wealth without needing to predict the market. You don't have to know the exact bottom. You don't have to know when Wall Street will rotate back into AI stocks. You don't have to know whether Palantir will bounce tomorrow or dip next week. You just need a plan, patience, and discipline. The people who usually win in the market are not always the people who make the flashiest trades. A lot of times, it's the people who quietly buy quality assets over and over again while everyone else is panicking, chasing, or sitting on the sidelines. So my take is simple. If you're bullish on Palantir long term, Dollar cost averaging can be a smart way to build a position without putting all your money in at once. It gives you exposure if the stock runs, but it also gives you buying power if the stock dips. That's balance. That's discipline. That's investing with a plan. Drop a comment and let me know what stock you're dollar cost averaging into right now. Is it Palantir, Tesla, Apple, SOFI, SCHD, or something else? Remember, I'm not a financial advisor, and this is not financial advice. Do your own research, manage your own risk, and never invest what you can't lose. Don't forget to smash that like button, subscribe, and share this with somebody who keeps trying to time the perfect bottom. This is Sat with Stocks by Sat06. No face, just facts. In 5. Peace.